Good afternoon, everyone. This is Peter Towers from ESS BIZTOOLS. Welcome to this webinar, the Innovation Companies Capital Raising. We're going to be joined today by some additional guest presenters, Michael Murtagh from Business Angels Groups, Rick McAnally from Founders Forum, and Peter Miller from BizTalk Proprietary Limited, and they will be talking to you shortly. If you have any questions as we're going through the webinar, could you please type your question into your computer, and in webinar jargon, raise your hand, and the panel will answer your questions later in the webinar. We're also going to have some poll questions today, and we would appreciate it if you could answer the questions, and we will then have the results which will help us in our future planning. So the new legislation that is currently in the Senate, having been passed by the House of Representatives, concerns crowdsourced funding and early stage innovation companies. This is obviously very unique legislation for Australia because in lots of ways we're finally catching up with the rest of the leading nations around the world who have at least got crowdsourced funding opportunities. So let's look at the crowdsourced funding first of all. The entity must be a public company. The maximum asset value of the entity has to be under $5 million, and the entity must have sales of under $5 million to be able to raise further capital using crowdsourced funding. The maximum capital that can be raised in 12 months is $5 million. The maximum investment that a retail investor can make is $10,000 per annum per company. And there is no limit on a sophisticated investor. And as you're probably aware, a sophisticated investor is someone with net assets of $2.5 million or a taxable income of $250,000 who produces a certification from their accountant that that is their position. The other very important aspect of the crowdsourced funding companies is that the government has introduced an intermediary organisation, which is a business which has an Australian Financial Services licence. And they are the organisation who will have details of the company that is seeking money using crowdsourced funding on their website. And they are the entity that the government is entrusting to ensuring that the appropriate crowdsourced funding offer document has been prepared. Some of the rules which would normally apply to a public company have been relaxed for 5 years. There is no formal annual general meeting required. There is no audit required, bearing in mind this is a public company, unless over $1 million in capital has been raised. And annual reports do not have to be mailed to shareholders. They can be placed on the company's website. The next entity that I want to just summarize for you today as the first part of this webinar is early stage innovation companies. These need to be formed in the last 3 years, but in some cases they could have been formed in the last 6 years, but there's additional tests, read the expenditure that those companies have been undertaking in that 6-year period. The total annual expenditure for a company that's going to be certified as being an early stage innovation company is $1 million or less, and also its taxable assessable income. Sorry, I'll rephrase that. The total amount of assessable income is to be less than $200,000 in the last 12 months. Now, grant funds that might have been received as part of an accelerating commercialisation grant are not included in that $200,000 limit, because as you know, accelerating commercialization grants can be up to $1 million. So that's not going to influence the eligibility of these companies by the $200,000 income rule. And in fact, having a company that's been through accelerating commercialization is a significant advantage for being assessed as an early stage innovation company. There is a 100-point innovation test, a bit like getting your passport or opening a bank account. The key contributors to the 100 points are the amount of research and development expenditure that the company has been doing in the previous year, whether they have been a participant in the accelerating commercialization grant, whether they've been in an accelerator program, whether they've already raised $50,000 in equity capital from arm's length investors, whether they've registered any patents or plant patents in the last 5 years that will contribute to some points, and whether they have innovation patents or registered designs in the last 5 years. Or the company is genuinely focused on developing for commercialization one or more significant improved products, processes, or services, or marketing or organizational methods. So this is meant to cover a company that has only just been formed. It might have been in the research and development phase for quite some time. It's only just been formed. It might not have even got round to applying for early stage registration. It hasn't applied for accelerating commercialization. But if a company in that category is able to produce proof that it's genuinely focused on developing for commercialization a product, process, or service, then it can be certified as being an early stage innovation company. Retail investors can invest up to $50,000 per annum. This was a late amendment as the legislation went through the House of Representatives. The original intention of the government was that retail investors would not be able to invest in early stage innovation companies, but that's been changed in what the House of Representatives has approved, bearing in mind this legislation is still in the Senate. And the capital gains tax exemption now is if shares are held for more than 1 year and less than 10 years, there is no capital gains tax on that investment. Originally, the 1 year was meant to be 3 years, but the government has changed that in the House of Representatives. Now, the real benefit from an early stage innovation company registration from an investor's point of view is that the investor can obtain a 20% investment rebate per company based on investments made in that 12-month period, up to a maximum rebate of $200,000. So obviously, an investor can invest up to $1 million per company and get a 20% investment rebate off their tax. The other side of the capital gains tax-free component is that there's no capital losses allowed for a 10-year period. So hopefully that's given you some idea of the general framework of both of these companies, the crowdsourced funding companies and the early stage innovation companies. The key aspects of getting investment ready, these businesses still need to go through the proper process. Obviously, they need to be able to identify what their business objectives are. They will need a business plan, budgets and cash flow forecasts. Business vision needs to be able to be identified. What are they trying to do? What are they going to do with this capital that they're trying to raise? And what's their exit strategy? Where do they want to be in the future? What intellectual property is owned by this business? What's been done with it to secure it Is there appropriate confidentiality agreements? These are the sort of things that investors are going to want to know. Have any patents been registered, or what is the current progress on the registration of patents? What's the basis for the share contribution? How much per share needs to be determined? And then the share issue obviously needs to be made at some stage. Who are the directors currently, and what additional people are proposed to be appointed as directors? Company secretary, accountants. These are key areas that accountants can have some input into, and perhaps your firm will be considered appropriate to be appointed to some of these positions. So as from an accountant's point of view, an advisor's point of view, you need to be thinking about what involvement you might like to take in some of your clients' entities if they're going ahead and trying to form these type of businesses. The CEO appointment is something that would normally be done before investment dollars are sought, and the businesses will need an investment pitch that they can present. So that's the overview of the legislation. So I'm going to pose a couple of polls, one at a time at this stage, to you. So the first poll is being sent to you there at present. You might like to think about that poll question. So we're going to close that poll question now. We've got 67% saying they're interested in participating. And we have a second poll question that we're now going to put to you. Yes, we have now the second poll question there. If you could have a look at that, please.